Hi guys, welcome to the 7 Money Show with me, host Sean. Again, we're outside, so I apologise for the background noise. Speaking of which, and don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the 7 Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of offers. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. Anyway, today we're discussing oil stocks and oil tanker stocks. Now, I said when Dominion hits about 70-73, it'll be worth going into. I went in myself, and we got confirmation from some experts such as Jim Cramer and the likes. Not that he ever says sell much himself, but the fact you've got to look forward to is they didn't need to sell those lines. Yes, they took a hit on the pipeline, but they still have the actual court's ruling that they can lay the pipeline. It just isn't financially feasible at the moment. Once oil prices go up, then it will be. However, they are transferring to wind because of where their customers are. Now that means that it's they can sell the rights to laying the pipeline down to another company if they wish. However, if they don't, they could just leave it. They have the money to fast track their wind projects and money left over to do a share buyback, which they've already said they will do after the tax year. Now, after the tax year, they will, and they've started a share buyback, your share price should rise. But then saying that, it's like saying the share price will drop after dividend by the amount of the dividend. We know this isn't always the case. So anyway, I said I would move on to tanker stocks. So we go to tankers. And you know, I said at the beginning of all this that Frontline and DHT were the best. Now I got rid of my Frontline when I broke even on them, and I know we don't like to break even on a stock. However, it's because I knew I was going to get a dividend from them, and I received more than £27 in dividend from it, so I ended up getting the £27 profit on it. Moved that money into Euronav. why would I move into Euronav? Well, this would have been the third best one to go into. And Frontline, imagine a company has 2 million shares on the market and they're going to float another 1 million shares. You're going to have your shares price heavily diluted. It's going to fall heavily. So I wanted to beat that. Now, Euronav, they have a heavy mixture of VLCCs, Suezmax and different tankers. They have a large fleet, and as well as that, the board buy back their shares when it hits 8.65, so it has an official support price, not just a support price on the market, but an official support price of 8.65. If it drops below that, then the company buy back shares because it's too cheap. So then, nah, you need to think about this when you're doing your calls and puts on a company. DHT, I've already gone through all the tanker companies with what their growth prospects are. Don't think these are going to be 100x's. These are companies that you're going to hedge your bets against the oil companies. For instance, I picked up Royal Dutch Shell at £11 a share, and I recently sold it at £13 a share, but if I wanted to, I could have waited until it got back to its highs. I still have my ExxonMobil shares. They're at half the price. You can pick up Chevron shares at a discount, and it's worth you picking up ExxonMobil and Chevron at a discount and buying DHT, Euronav, or even NAT if you want, and pick it and combining them. It will still be cheaper than what you were going to buy them for pre-COVID-19, or Roni Rona for our friends across the pond. Now, you might realise there's been a lot of insider buying with NAT, which I spoke about before. Now, with NAT and DHT, there's been a lot of calls being bought up compared to the amount of puts. So you might want to bear that in mind as well. So that will start rising in price in both of them, and we're not, tell the truth, we're not buying them just for a short-term gain. We're buying them to hold in case of an oil crisis. Of course, if we get short-term gain and they jump up, nothing wrong with selling them and moving that money into another tanker price. If we end up with a hype play like we had with NAT, nothing wrong with moving that money across. And anyway, I'll see you in the next video. Stay safe, stay savvy, stay investing. Goodbye.